Hello, everyone. Not an automatic reason to be completely concerned. Obviously, the market did have a bit of a pullback today. In today's video, I'm going to talk about what the next steps are. There's clearly lots of tech stocks still doing very, very well. So we're going to have to see what the next steps are. All right, so without further ado, let's get started. First and foremost, let's just go ahead and take a look at the large tech stocks. So number one, let's just go ahead and take a look at Apple. As you can see, Apple is almost testing the 1.618% fib of this recent move to the lows and the highs. So clearly Apple is one of the leaders here. Amazon also doing very, very well. Also retesting the 1.618% fib, similar to Apple. Microsoft also continuing to do very, very well here. Clearly, right? But now what the issue so far with a lot of these tech stocks is that yes, Microsoft is trading outside of the upper level of the Bollinger Band, but it's not opened and closed outside of the Bollinger Band. So it's not completely overextended. Similar to Amazon, you could see how Amazon is opened and closed outside of it. A stock becomes a bit overextended to the upside once it has multiple opens and closes outside of the upper standard deviation. That hasn't occurred yet on any of these stocks, really. Tesla, similar situation. It's getting almost there. But clearly Tesla had a very strong move today, but then we failed at the 400. Netflix starting to show a bit of a reversal here, especially if we get a close on Netflix below 905. This could be a swift move down to 880, in my opinion, on Netflix. Google is still chopping around this 177, 178 area. So we need to see how essentially Google responds at around 180 to be safe. 178, 180. And then Meta also failed. Basically, we bounced at this 4 point fib and at 630, and we had a bit of a pullback. This could fall back down below, similar to Netflix. If Meta drops below 600, it could see 580 pretty soon. And with that being said, we see Amazon, we see a lot of retailers starting to do very well. And this is primarily because of the holiday season. Another thing, technically, is that seasonality-wise, into the middle of the month, we do get a bit of a pullback. So this is sort of in line for a middle of the month bit of pullback in seasonality. We were short in the morning, and we rolled the puts down, thankfully. And what ends up happening after the pullback is there tends to be a bounce rally into new highs into the end of January. Now, is that going to occur? Currently on the ES, we just had 1 day outside of the uptrend line. What I really want to see is if we can get a close below 60.50. If we can get a close below 60.50, that would denote a lot more weakness in the ES, and it would confirm more downside, in my opinion. What's interesting as well is the NASDAQ is still holding this 21,420 level of support. If it can break below the 21,340 recent highs, then it could get a bit more of a pullback. But most importantly is that, first of all, we see that the large tech stocks, Apple, Amazon, Microsoft, Google, Tesla, they're still doing well. But then NVIDIA ripped down below from the level that essentially was, like I was saying, it would be a really, really good level to short, and we ended up dropping right from that level. And it seems like NVIDIA, created a bear flag. We came to this level of resistance here, and we gapped down. We showed a lot of weakness here. Same concept with AMD. AMD failed to hold above this uptrend line. So as we were monitoring the downtrends were a big proponent that technically what's going on in the market currently on Microsoft, on Apple, and also here on AMD. It failed to hold. So now, the issue is that these chip stocks, which were the leaders of this entire rally in the market, moving for the past few months, are starting to show the most weakness. So now, how much higher can stocks like Apple, for example, just even looking at Apple, we're not even trading outside of the upper level of the Bollinger Band, which is, after a huge move like this is very, very, very bullish looking. So stocks like Apple, Amazon, Tesla, the Microsoft, Googles of the world, they're going to basically be pulling the market up. And we're going to need to see how much higher these can essentially go while NVIDIA and AMD dip down a bit. While these get a lot more strength. And then once, I'm not saying they're going to start hitting these levels, but basically if they get a lot of strength and consolidate, then NVIDIA and AMD can get some sort of a bounce once the profits from these stocks end up going into AMD and NVIDIA. So they just rotate. So we have to see if the rotation is going to end up happening. But if there's ever going to be a time where the market does have a bit of a pullback, it's seasonality-wise, it would be during this week into the next week, the middle of the month, and then the end of the month is clearly very, very bullish. Last thing that I want to take a look at is the VIX. So the VIX is starting to get a lot of buyers here. So the VIX is very important to look at because it has an inverse relationship to the market. If the VIX is rising, that means the overall market should be falling, and clearly we can see that that's what's going on. The VIX held this $13 level, and it's now closed above 14. The VIX does look bullish. As I was saying, the fact that it was holding this level, it was very important for it to hold the level, and now we're trading above it. So if this can continue up, the ES is also showing some bearishness. This does not look completely bullish for the overall market. The Russell also is not helping. The Russell is not helping anyone's case. This is definitely also pretty weak. You're not expecting 2390 to hold on the Russell. Things look bearish on the Russell as well. But, who knows? At this point, the buyers could just step in and everything can change over a trading day, honestly. So, with that being said, it's good to it's not an automatic bearish sign, but it is starting to technically show some sort of weakness. But then also it's starting to show a lot of weakness on chips, as well as overextension on some tech stocks. But that's not a guaranteed automatic reason to be bearish. It's much, much, much easier to buy dips than it is to go short into strength. So with that being said, I hope that makes sense, and I hope you guys have a wonderful rest of your night. Take care.